Um, okay, well, oh my God, we have a newcomer. Well, an old comer, but a newcomer. That's Scott, Irene, Tina.
Hi.
Hi, Scott.
Nice to meet you, Irene and Tina. How are you?
Nice to meet
Yes.
you. What's
Good.
going on?
I am obviously I'm trying to not just be a lurker.
Yes. See, you got here too early. There, that way you can't like just crop up in the corner and not be noticed. Now your presence has been noted. You will be called on in this class.
He
He
means
has
that.
back.
The answer is Apple.
Exactly. Right. Always. Always. That
The
is
professor
correct.
taught you well.
Yes.
Well, it's funny. I did do my homework, and unfortunately, my Apple's my only positions that are down. But
I know.
Yeah.
I was looking at everyone's spreadsheets, and I'm like, who the fuck is the idiot that's advising these people to buy all this Apple? What the fuck?
Well, I'm expecting that the answer is you didn't buy enough.
That's right.
I
That's
lost.
right.
But
Here's the answer.
I'm
That's
losing,
right.
but I'm making up for it on volume.
That's exactly right. Because hey, it's apples. They're supposed to be cheap. Just keep buying them.
Yeah.
Well, hey, I'd say, what I wanted to kind of touch on a little bit here, and that's why I asked you guys to send me your stuff, is, is how to play defense sometimes. Well, of course, selling something. Hey, Amar, how are you, man?
Hey.
Saying something is always an option. Selling something is always an option. But, when you've got a long-term position, you don't want to sell because of a short-term bump. But at the same time, how can you play defense at that time? And realize, play defense, but understand that you're playing defense in a short-term perspective, so that you are taking a risk, and it either ends up being something or it ends up being nothing, and you lose it all. Now, the thing to always remember in that is usually when you're playing defense and you lose it all, the long position has gone up more than what you lost. So in the aggregate, you've gone up. Obviously, if you wouldn't have had it, you'd be up more because now you just lost whatever that was. But if, let's say, God forbid, Apple has bad fucking earnings this week, it's not impossible. Shit happens. And usually, this is just the kind of time when that kind of shit happens. When everyone's like, earnings are going to be blowout, it's going to be great. And it's not that they don't beat it, but they don't beat it by as much as everyone thinks. The secret whisper numbers, because there are estimates, then there are whisper numbers, and then there are literally like, these are the numbers we don't even want to talk about kind of thing. So, and when something market, like we saw this week with the whole bullshit about the taxes, just rehashing information, sometimes the market just needs to respond to something in the short term, because just like we're trying to do, it's looking long term. So if a lot of the analysts are raising their S&P for the end of the year to 4,400 and it's at like 4,200 now, it's like, hey, none of you guys are geniuses. What are you doing? You're going out 3 or 4%. It's not a big deal. So periodically they need to talk the shit down, So, and as we saw with the banks, and as we generally see in earnings, there's a more often than not selling of the news. It's like, okay, cool, great, stuff's in, but it's not like they're selling the news and then waiting until 2 weeks before the next quarter before they buy in. It's like, somehow in that moment, someone threw the towel of stupid on them. And it takes them 3 or 4 days to like remove that towel and go, oh, wait a minute. No, 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 Apple is fine. But in the meantime, they might have end of month, so things can start for their internal, performance, start tracking from a month to month thing, or even expiration dates. Look for those. Look to see when S&P options expire. There are things that are like triple witching, and then there's the worst of them all, quadruple witching. Those are days where you have equity options, S&P options, S&P futures, and some other shit expiring. So it creates exaggerated volatility, So all of these things can be made to work for large institutions, because the money that these guys wield can move markets short term, and that's all they need. That's all they need to catch, is that short term move. So for you guys, when you look at your positions, and this is also why I say, hey, if you've got a position that's 40 grand, and even if you have some outsized winners that are 10 grand, how much are you going to risk on that? My thing is, if you're, you should never really put more at risk than 1%, and that's even a ridiculous amount. But depending on the size of your portfolio, like, for instance, with Apple, I think I'm like at 2.3 million or something in all of my Apple shit. So next week, when I do take a defensive position on my Apple holdings, and I've already kind of started to do that this week with these S&P puts that I've bought. They're more of a broader market, defensive thing rather than Apple specific. But what I will do there is I'll probably put like 20,000, as a hedge. And what I'll do is I'll buy Apple calls that are just like, barely out of the money or just in the money, and that expire, maybe not this Friday, but the following. Okay. So if Apple takes a shit, that will explode, because the time of the amount of time that exists will be very, very brief. It'll, so the premium that I'll be buying, because it's Apple, it'll still be high, but it won't be as high as something that is, 6 months or a year out. So in essence, the amount that the put will go up as a 1% position against Apple will punch above its weight relative to its size to the overall position, because the things that will be dropping will all be long term, and their decrease will be applied over the entire length of time still remaining, which is a year and a half. So if it drops 10 points and you essentially have to amortize it over a year and a half, it's not a lot. If you have to amortize it over a week, it's a lot, so that's why the put is a shorter term. Now, why am I buying puts as opposed to what I will explain to you next? Because in this situation, the odds are that Apple will blow it out. Okay, so I'm opening a position that will allow me to profit if it does not. Okay, the other way to play this is to sell calls against it. Okay, and again, I will explain this, but this is one of those red lights, red lights, red lights. Do not really do this until, you know, at the very least, you have a discussion with me and potentially maybe even someone at Schwab or whoever you trade with, you know, to make sure that you can explain it in a way that the person who understands it better understands that you get the risk. Okay? You sell calls, and that what does selling calls means? Okay? In its very, very basic terms, when you buy something, you take money out of your pocket and you give it. Okay? You buy it, and that's the transfer of money. When you sell something, you collect money. Okay? So normally you buy calls, you put money out, and then you sell calls, you collect money. But you can do it in reverse. You can sell calls first and collect the premium. So just like, let's say you bought Apple 123 200s for $12, you could sell them for that $12 and collect that. However, when you buy them, and if it goes from 12 to 20, you make that $8. If you sell it and it goes from 12 to 20, well, you collected 12 and now you have to pay back 20. So you're losing, okay? So you want to sell calls when you are as certain as you can possibly be that the stock is not going to be going up. Okay, that it's had a run, you know, like with a lot of these SPACs, like let's say all the ARK shit. ARKs would have been wonderful to sell calls against if you have a position in them. You know, like for instance, for you, Irene, you have those Iridium calls that are completely worthless. You know, they're like 6 cents, right?
Yeah.
Okay, and like a strike price of 60, and what is that shit selling for? Like 20, 30, I don't know, whatever it is.
No, it's like I think 38 or 40.
Okay,
yeah.
great,
Yeah.
great. Okay,
Whatever.
so, but you have what, 90 of them or something, or 60 of them?
No, I have 2 options on them. I
Okay,
think.
all right, well,
Yeah.
then it wasn't that
Nothing
much.
crazy. Nothing crazy.
But, you know, what you could do is you could sell those.
Or 4, actually. Sorry.
You know, you could sell those, let's say, the 50s, okay? And let's say instead of 6 cents, those 50s are $5 or, you know, $1, okay? So what you would then do is you would collect that dollar times 4 times 100, $400, okay? And since it's not going to get to 50, you will keep that, as opposed to buying puts with a strike price and hoping that it falls further, as opposed to buying calls that will never see it. You collect that. And in many ways, that's what people do when they buy stock, you know, in something. They will sell calls against it that are out of the money, you know, and that are like, I mean, it's like, bad things aren't supposed to happen, but when you think that, that's when they do. And you can create a consistent revenue stream by selling these calls, you know, if you're just really careful and you time them and all of that. But that's just kind of like a very quick overview. If you ever get a bug up your ass and you're like, tell me more about this, we'll have a further discussion. But right now, if you do want to take any kind of a defensive position on something that you have. And I usually do this only during earnings season, because I understand that this is when you can have volatility and fluctuations. But I also understand that these are short term. So this is when I view buying this insurance as actually something that can be profitable, rather than just, well, let's just hope, you know, like buying SPY puts or something like that, which are basically like not tied to anything specific, you know, just a general, well, the market's overinflated, it needs to come in for a return. So I wanted, you know, to bring that up and to essentially I took a look at, you know, all of your stuff. And there are definitely positions on which all of you have made substantial increases. I don't know exactly what those positions are in dollar terms. I just know how much you made on a, you know, a price purchase versus current, but not on how big the positions are in your account or any of that stuff. But just based on that, I wanted to kind of bring that up because a lot of the conversations that I've had with you guys recently are about, you know, when do I sell? When do I sell? You know, what do I do? Because it's important to understand that it's not that linear. It's not just you buy and then you sell. There's a lot that can take place that is along, you know, parallel paths that do not involve the buying and selling of the underlying security, you know, so that. Other than that, I wanted to get a sense of what all of you feel is going on, because everyone hears certain amounts of information. You know, I had a friend of mine call me out of the blue this week. He he does a lot of commercial and residential tile work in around Baltimore. Who said? Oh, me. I said Okay, it somehow echoed back at me. Okay. And, you know, he called me out of the blue because he was like, listen, this is what my business is. You know, I'm paying huge amounts for containers, for this, for that. What are you hearing regarding inflation, regarding, you know, all of this stuff, interest rates? And it was interesting for me to understand what he's experiencing and how it's completely different from what I'm experiencing. Because he brought to me essentially a perfect example of Wall Street versus Main Street. You know, he was speaking directly to cause effect. This shit is costing more over there, and then even though my price has gone up 100%, I can't even get it because the containers are being purchased by companies that have higher margin goods, and they're paying more for shit that's mine, that's lower margin, even though my inflation has doubled the cost. And I'm like, dude, they're saying inflation is transitory and nothing's really going up in inflation because, again, what do? They provide inflation numbers and then they go, X food. And we're not gonna take into account the inflation for food. And well, on Main Street, yeah, you go to the store, shit costs more money. You got to take that into account. But the Fed doesn't. The Fed can be very selective about what they choose. And in the end, really, you know, I mean, this year in many ways has been like the biggest epiphany is the game. You know, is really just trying to understand the flow of it, because that's all it is. And then it's how the companies ride that flow, you know. And like Amar, when you brought up like, hey, what do, you know, Domino's and, you know, and stuff like that, I started to think about that because, you know, I don't have an opinion on Domino's. And unless someone in this group is like focused on Domino's, chances are they may not either. We can all be like, well, they're this, they're that, blah, 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 and all of that. But, you know, and like Rob said regarding me, he said, hey, Vadim presents what he knows. If you ask him about other shit, he's not going to know. And that's 100% true, you know? Yeah. So what I really wanted this whole thing to be is not so much a, hey, I found this stock, hey, I found that stock. Because that's more a traders group. That's where, you know, everyone, that's Reddit. You know, everyone's throwing out names of companies and whatever shit. But for me, like this whole thing is really, it doesn't matter what company you invest in. It's all about what is your approach to that. The company you pick is the tactical execution of your philosophical approach to investing, you know, and that's kind of what I, if nothing else, kind of want to convey is to the insight that I've developed, for whatever that's fucking worth. Because, you know, the companies are the companies. You can find better ones. You can have returns that kick my ass, all of that. But it's about the clarity, you know, that will allow you to focus. So that's that. All right. What do you got?
I'd like to ask a question, if you don't
Go.
mind. Okay, so one of the things, it was back to what you started talking about, was regarding buying the rumor selling the news situation. So what I noticed was, because now this is my second earnings season, and what I feel like I'm doing is learning the patterns, understanding how it behaves, the market. Like, I'm treating it as an organism, and I'm trying to study it and understand how it works so I can make better observational calls on things.
Right.
So I know in the finance stocks, like the banks and all, that after earnings, they always shit the bed. Well, at least twice in a row. And that, you said, was a general pattern. And we talked about, as they're going into earnings, and we're talking about companies blowing things up. Is that like exclusive to banks?
Going into earnings, into earnings, companies, what did you say?
Like
Companies.
you're talking about, for example, let's talk about Apple. So everybody's like, Apple's going to blow it out. Apple's going to blow it out. So is their price inflated like already, because the price, it's already pricing in those good numbers? And then the institutions are taking profits at the top once they announce, and then they know it's going to come down because it's a pattern, and they buy it again when it goes down, like something like that. Is that like a thing?
Look, you have to realize that everything is built around trading. Okay, it's not built around investing. Okay, banks, when they announce a big thing that they all beat on, was trading. Okay, they don't go out and say, yeah, just buy this shit and we'll call you again in 5 years. You know, don't worry about it. You know, that's it. No, they're fucking, you know, I mean, the 2 weeks that I worked at a brokerage house was like cold calling, you know, call. It's like generate. And that's what you do in a bucket shop. That's what you do at Goldman. It's just, you know, you do it there while wearing a wife beater. You do it there while wearing a three-piece suit. You know, that's kind of the difference. So, you know, everything with the banks are going to shit the bed, or this is going to, it really doesn't fucking matter if you're looking at January 23 and whatever is happening is now. The only thing you're concerned about is, what's the story? Is the story the same? Hey, great earnings, it's going to go up. Why wouldn't it go up? Great earnings, and all the analysts are still saying, great earnings, it's going to go up. Great earnings, why is it dropping? Who the fuck cares? It's dropping because they need to generate a better entry point.
But is that the case in all sectors? Like, is it often? Okay.
It's the case in sectors that matter, that are observed, that get action. This isn't going to happen in, I don't know, a mining stock. No one's going to give a fuck. No, you know, no one's really paying that much attention to that. Unless all of a sudden, this is the 5 minutes that the sun shines on the mining stocks. Oh my God, look at the, Rio Tinto in Australia, blah, 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 whatever. So it's, for me, if you understand what the patterns are, that, hey, there's a good chance they're going to beat the earnings, but the stock's going to take a shit, then the question is, do I have money? Do I have money? If you can identify patterns of behavior then you should be able to take advantage of those patterns of behavior.
Right. That's what I'm trying to understand. Like the patterns of how things work. That way I could find, even though we're doing long-term investing, trying to find like good entry points, like you talked about, you know?
Right. And, you know, and again, good entry points exist or don't. You know, there's never, it's like, you know, I don't know what the high is going to be. I don't know what the low is going to be. And yeah, when it's like, it's a never ending story. Do I buy going into earnings? Do I wait until earnings come out before I buy? You know, what should I do? Because it can go either way.
Mhm.
Oh, I'm going to buy before. Oh, it took a shit. Oh, I'm going to buy right after. Oh, it shot up 10 points. But it doesn't matter if you're buying long term, you know,
Mhm.
but you just have to look at what's okay, here's earnings, you know, how's the stock behaving? Has it been rocketing? If it's been rocketing, especially like 2 weeks before that, chances are it's going to take a breather, you know. Don't expect it to continue that slope for a little while. It may resume it in a week, you know, but give it a little bit of time. If it's going like this, you know, flat into it, then yeah, there's a good chance. That's why right now, I feel that if Apple does come out with good numbers, the stock will run because it's hit the 140, 145 range. Now it needs to break through, you know, because if it gets through 150, 155, it's going at least to, you know, to 160 to 170, you know, because then it needs to create that separation from the old high levels to new ones, you know, and ideally it will do that with a breakout where it'll like close the night before earnings at like, I don't know, 137 or some shit like that. And then earnings will be spectacular and it'll gap up at like 145 and won't trade down. You know, so that when they show the chart, that's what investors love to see. They love to see a chart where you see things and then it's like, and boom, you know, oh my God, look at that gap. You know, I missed it last time, but I'm going to get it now so I don't miss it next time. You know, so that's that. Okay, next. Tina? Scott, the new people? Lena? Hello?
I can go if somebody.
I got something.
Okay.
What
Okay,
do you
Brad.
think about? Hold on, I can fix that.
I'm just listening for
Way
now.
better.
No worries, all good, yeah.
So how about the Bitcoin stuff? Because that has come down. That seems to be taking a breather. Is this a good time to get into that a little bit more? I just got some. It's gone down. It seems like, you know, it's kind of gone down and steadied out a little bit. I wonder if it's a time to get into that. I mean, that doesn't really have earnings or whatever, but it seems to be following a pattern where it comes down and then shoots up a little higher than where it was and then comes back down. So I was thinking about getting a little more into that for that reason.
Right. I'm just, well, I mean, Bitcoin right now is a little bit below 49,000. I don't know what your entry points are. You know, I guess, let's see, that GBTC is at around 42. I don't remember what you got into it at.
Yeah, I think it was right around 40. Yeah, I think it was 42-ish.
I mean, look,
I can check
you know,
that too. But
I'm not going to speak as like a wizened sage or any of that shit when it comes to this arena because I'm very new to it. You know, I've been a skeptic of it for years and years and years. And this year, you know, I turned that page. And most recently with Ethereum. Do I believe it's going higher? Yes. Can I go into an explanation of the blockchain and give you case studies? No. You know, for me, it's, I listen to what is happening in terms of its acceptance, you know, who's bringing it more mainstream and all of that. And it definitely seems like it's Bitcoin and Ethereum. All of the other ones almost kind of exist to validate the whole thing. You know, it's kind of like saying currencies, it's not just dollars and euros. Look, the Chinese have money, the Indians have money, but in the end, it's just dollars and euros and maybe a little yuan. But, you know, but that's about it. But at the end of the day, Bitcoin and all crypto shit should be a subset of your speculative subset.
Yeah.
You know, it's like, again, redwood, the trunk is the, you know, the non-stupid shit. The bark, 10%, is the stupid shit. The little mold that grows out of the bark is the Bitcoin shit. You know, because that Bitcoin, if it moves, it can cover the whole fucking tree. And then you're, you know, you're loving that mold, as opposed to if you put a shit ton of money into it and it doesn't, you're out a shit ton of money that you chose to put into something very high risk, because that's what this is. There is no way you can look at anything crypto and, you know, any SPAC is more secure than crypto. You know, any EV lithium company is more secure than crypto. You know, because there's just, you know, first they wanted currency. It's not currency because it just moves too violently. Then it was like, oh, it's a store of value. Not when it drops 25% in a week. That's not a store of value. It's a speculative asset. That's what it is, you know, but it's like a nuclear speculative asset. So treat it accordingly. It can either explode in a good way, or it can fucking irradiate you and melt you the fuck down. Okay. Next.
So just one last, just in addition to that.
Yes.
So then bringing it back to something more familiar, but that seems to be running parallel with Apple, is Tesla. Tesla also had good earnings like Apple did. It came down in price during the same quarter for, you know, no great reason. Now it's going into earnings, and the thought is, you know, they have beat what the predicted number of sales and whatever it is. So the thought is that it's going to have good earnings. I wonder if it's a good time to get into Apple and Tesla pre-earnings, which is like right now, I guess, for Tesla.
Okay.
Or wait.
Okay. I'll just give you tiny little thing here.
Okay.
Okay. Apple PE around 25-30. Tesla PE 1140. Okay. Now, I don't want to be the poo-pooing guy because, hey, without the T, there'd be no Fanta, you know?
Right.
And, you know, in the long-term grand scheme of things, I'm a huge Tesla believer. And me selling out of it is a regret, for sure. For sure. I shit my pants. There was a time, you know, and you know what? It always happens that way. My pain threshold correlates almost exactly with the low of whatever that period is. That's it. When I start dumping shit, I should almost be like, okay, guys, I'm dumping shit. And you'd be like, all right, awesome. We're buying shit, you know, because I think it was either the day that I sold or the next day were the lows for both Tesla and NVIDIA. You know, since I sold them, I've left like $120,000 to $150,000 on the table as a result of just not holding on. And now, you know, Tesla, if they can actually get more focus on cars and also the ancillary stuff that I really believe is where the future of Tesla lies, and not have it be continually pointing to the fact that Tesla has allocated a certain amount of its cash to crypto, you know, because that's not going to do well for the stock, because if the price of Tesla stock becomes completely correlated with the price of Bitcoin, you know, then we're not really talking about, we're not then talking about MicroStrategy, which went from being a software company to being a Bitcoin proxy. Okay, so I saw Tina light up earlier. So let's go to Tina. Tina in Pennsylvania.
I'm still trying to figure out. This is my first earnings season, so I'll pay attention to look for patterns. I got to get my arms around that. Still just trying to figure out when to make moves as I'm new to it. So I just started in February. So I'm still trying to follow and when I decide to sell or buy more. I'm still, it sounds basic, but I'm still struggling with the right moves.
Right. Well, you know,
None of us know when to sell. Don't worry.
But it just,
right.
I asked the other day because I had one that was really up. Irene is like really up, and I'm like, well, bottom, should I do something now? But it's out until 23, so you know, I'm hedging.
Right.
It's going to stay and do better, so hanging on to it. But it was up like 65%. So I'm like, oh, this is
right.
good.
Right. And you know, I think again, and as we talked about it, it kind of different factors come into play. You know, what is it that you're in? What we were talking about was the Berkshire options. Okay. If we were discussing, I don't know, Square or Facebook even, or Google or anything like that, and you had been up as much as that, I would be actually more nervous than with Berkshire, simply because Berkshire is a grinder, you know, and as opposed to tech companies, which tend to be sprinters, you know, and when it's basically it's the tortoise and the hare kind of thing. When you have something that's you know, sprinting, it's like expending energy and then it stops. And you know, when stocks stop, they tend to drop. They don't like kind of like, you know, take a breather, hang out in the same spot and keep moving. You know, it becomes like a cycle like that. And you know, if you want to try to catch those things, then you can look at it and be like, okay, hey, whatever the techiest stock you may own, Apple, whatever. Oh, look, in a month, the thing's gone 40%. Chances are it's not gonna over whatever the next month. Then, you know, maybe you can look at it. But with Berkshire, because, you know, it's something that essentially once it gets momentum, it kind of just keeps chugging, you know, it becomes something that's hard to make its momentum stop. And it's never because, oh, well, it ran ahead of itself, because the things that support it are not high flying things. It's like, what does Berkshire own? They own furniture. I mean, they own Apple, yes, but they own, you know, furniture companies, banks, you know, things like that. So, you know, a lot of when you sell is, what is it that I'm selling? If you buy like a GameStop and in a 3-week period, it goes up 100%. Well, you got lucky, you know, you should be selling.
Sell it.
You know, but with everything else, you know, like I saw, I think it was actually a Wendy position, Rob. And this is like one of those things where I say, hey, it doesn't matter how much, but always be adding cash to your account, you know, because even a couple of $100 can have an impact, especially when your account is not big. Like one of the positions that Wendy had was, it was one of the Apple options. that she bought it like $12.50 or something like that, and now they're like around $6. And I think they're like January 23 or something like that. They've got a
They're like 200s or 210s. I think that's why we hesitated to add to that strike, right? The strike was pretty high.
yeah, I don't know. I thought it was the 195s or something like that. But you know, the point there being that, or there were even other ones that were like $2, or you know, like the Fords, I think, or what does she have here? Yeah, like the Fords, and yeah, the apples that I'm talking about were the January 195s. They went from 12 to 670. So it's like, you know, if you can squirrel away $100, $150, you know, every so often, you can find yourself in a position where you're like, oh shit, you know, I'm down a shit ton. Let me buy a little bit. Oh my God, was that Andre? Oh, I don't know. Did no one else hear that giant
Yes.
boom?
I heard it.
Okay, cool.
I guess the
Anywho.
question I would have is we've still been trying to figure that out. And one of the things I think I've sort of deduced, and again, I don't know that there's a straight formula for this, but with options, if you can buy something further out at a lower strike price, it seems to make more sense sometimes than piling on to that position,
Yes.
right?
And
so-
what I'm actually saying is, and I'm saying it in an obtuse way, is what you in essence want to do is you want to make an impact that reduces your overall cost. Okay, and you sometimes do that by buying that exact same thing,
right?
Or you sometimes buy it by buying something else that is, you know, of the same genus and everything else, but has a different strike price, different expiration, whatever the hell it may be, but will bring your shit down. You
right,
know,
like my AbbVie, right? So I had some
Right.
AbbVies that got pretty deep into the weeds, 46, 47% down. And I looked at adding to that position. I was tormented by it. And then I finally said, kind of watching the pattern you said, I'm like, no, don't buy that. Buy a lower strike price, buy up. Those immediately made me money from day one. And so I guess maybe this is an interesting way to look at it. This is the way I look at my AbbVie position. I have two different strike prices. I think the dates are the same, maybe. I
Right.
can't remember. It doesn't matter. But as long as one of them is bigger than the other, as long as I'm
Right.
making money on the
Right.
overall position.
right?
Yeah.
Exactly.
And I don't want to say that we've written off some of those 200, 210s, the higher apples, but
You should not. You should
Yeah.
not. I wouldn't necessarily be adding to them, but you shouldn't be writing them off. And you
Right.
should keep a close eye on them, because if the stock starts moving, those are the ones you want to be buying.
okay.
Yeah.
Yeah, okay.
And, you know, but Tina, I just want to bring it full circle to yours.
Mhm.
And it's that, you know, for me, one of the most important things is investing is something in which there are times when you can feel very, very powerless. You know, like, oh my God, my shit's going down, I'm losing money and blah, blah. And a lot of the times, you know, that happens when, and this isn't like a response directly to Tina, it's a response to what Tina brought up to everyone. It's critical. It's critical to always, always, always have even a tiny little bit of money that you can put to use somewhere. Okay, because it's that tiny little bit of money that will serve a great and powerful symbolic function. It's that when shit is hitting the fan, okay, and when your shit is dropping and you're not feeling good, it's being able to come into the market at that moment and buy $500, $1,000, whatever it is, of something that will show money very quickly. Like you said, Rob, you know, with the AbbVie, you bought something else, and it bounced, and it's like, boom, you were making money. You were still down on the other shit, but now here was this green shoot. And when you sometimes see nothing but blood, you need a green shoot. And it's those green shoots that over time make you feel like, hey, you know what? I'm confident that I'm going to make money. And that's it. That's it. When you can get to that point, that I know I'm confident that I'm going to make money. Not today, maybe. I might have some total shit my pants days, but I will make money, And the reason I feel that, the reason I know that is I know that on those days, on those same days that I'm shitting Tesla and shitting NVIDIA, and by the way, the only reason I sold both of them was I was up like 70% on them when I sold them. I'd been up a lot more on them, but I was like, fuck, this can go to me being down 30% this quickly, and I don't want to be one of those guys that loses a big profit. So, I sold it, and since I've been, whatever. But, it's having the ability to pick something up. So whatever it is, set yourself up, on something where it's $100, $200 a week, whatever it is. Obviously, the more, the better. And then, make it a point to, okay, it's a shit day. Let me put a little something into the market. Just kind of get used to the habit of, okay, it's a shit day. Opportunities. And what's awesome to do on a shit day? What's awesome to do on a shit day is pull up the upside chart. Any fucking company can be going up through its 50-day average on a up 250 day. But which companies are doing that on a down 150 day? Which companies are fighting against the trend? That's something interesting to look at. Also, the upside shit works. This time right now, even though I developed this thing, I don't even know how many years ago, and whenever I would play with that, I would be like, yep, there it is, yep. But I never put money really into it like I'm doing now. And I'm not like continually adding into it. I have like 6-7 companies in there, and I'm okay with that. If I sell one or two, I'll add something else. But if you guys have that upside chart set up, use it, okay? It's also very, very good for you to develop your thinking by creating these, different parameters, different algorithm things for yourself, and then seeing what the results are. And, you can even create tiny little either watch lists or just buy a share of whatever one comes up and see how it performs. See if it's like, if it, does what you set it up to do. And if it does, then that becomes like, like right now I have my big portfolio, then I have my ARK piece of shit, and I have my upside, and so those are like the experiments, and through those experiments, you gain so much learning about, everything else. It's like, you almost feel like this is what an investing decathlon is about. It's like I'm competing in the sport, but I'm doing all of these different things. And because of that, I'm a better and stronger athlete in all of them. It's funny that I use that athlete. All right. Anyway, Amar, Scott, anyone, hello.
All right, I can go.
Okay.
So I guess, I don't know if you want to do public flogging, but what did you think of my spreadsheet? Was there anything I should have worked on harder on that spreadsheet?
Look, should you have worked on it harder? What does that mean?
I mean, is there any
Um,
positions I didn't average down correctly, or maybe
I mean,
or
you know,
like my Ford is kind of the one I was kind of a little concerned about because it was at, right now it's around hovering in the 12s. I bought a 17 just because of the price. Should I have bought a, more closer to the money price on Ford?
yes,
Okay.
yes. I don't know how many of them you have. And these are January 23s. I also hold those. I don't know what my cost is, how, whether I don't know if I'm doing better, worse, or same as you. But I am most recently, I think I'm adding to my 12s,
Okay.
my January 23 12s. I was speaking to someone today and I said, listen, I can't guarantee my performance for you because you're not doing the same things that I do,
Yeah.
so you're not, it's not even, you're not buying the quantities in all the positions. You're not doing all the positions, and neither should you. That's not what this is about. I just throw it out there and you do whatever you
Yeah.
want, and all of that. But it's more about, really understanding, like, looking at it, and kind of like what Rob was speaking to earlier, is you look at it and you say, okay, hey, the 17s are not behaving well. Yeah, I can buy more of them, and I'll bring my costs down, but it's at 12 and this is 17, and so hey, maybe let's take a look at the 15s, let's take a look at the 12s, maybe let's just not take a look at any of that shit and be like, well, we'll just see what happens over the next, I'd say at this point you're good until like whatever the quarter ends in September, October,
Okay.
of this year. Wait until then. And then, if it's still like in the dumps and there's nothing that says, hey, baboom,
Yeah.
whatever is going to explode early next year when you still have a year out, then you have to start thinking about taking a capital loss or whatever,
Okay. And then my other question was, like, for example, if we don't get like basically a little call against Apple into the earnings, or an option against it, is that long term? Is that even going to matter? Like, let's say I don't want to do it. Let's say I don't want to get a put against Apple. I just want to play it because I'm looking at the previous earnings, and last time it dropped like 9%, but then it dumped even more. But then the whole market, dumped. I don't blame that on their earnings.
No,
So it dumped
you
6%
never have to
before
do it. You never
Yeah.
have to do it.
So I'm not wrong for not wanting to.
No, because in the end, if what you're basically doing is you're betting against something that goes up 90% of the time,
Okay.
in the grand scheme, the market. So, and Apple goes up a lot of the time too, that's why it's the most widely owned stock. So, sometimes you do shit because you're like, I want to see if I'm smarter, which is
Yeah.
usually saying, hey, I want to see if I can lose $20,000 in 3 days. And the answer to that is always yes.
Yeah, I mean, so the
Um,
thing is, I have a smaller account. I think all of my options that you have on that screen cumulative are like maybe 75,000.
Mhm.
So, I mean, so when I buy put options and I lose, let's say I lose 1,000, that's a huge chunk of the profit that's being pulled away. So I'm always like, you know what, are these put options? I know you had mentioned like a few meetings ago that you added up all your puts and that
Right.
you really didn't make too much money on the puts, right?
No, I lost
made-
more money, absolutely,
Yeah.
than I made.
So
And
it's
you
like
know
betting
what?
against the thing that goes up.
If your whole thing is $75,000, okay, then if you were ever to be doing puts, it would be against the full 75, and you'd risk at most 1 to 2% with some SPY puts that would be like at least 3 months in their duration.
Yeah.
So it wouldn't be something that expired quickly. And if in your position let's say the Apple options, what are they? 20%, let's say $15,000.
Mhm.
Are you gonna, what's 1% of that?
Yeah.
$150? What are you gonna risk? 2%? $300? What are you gonna get for that? Yeah, you might get one contract that expires this Friday. Okay, well, why you could, and maybe they will have bad earnings, and that $300 will become $3,000. And at worst, you'll be out $300 because the rest of your shit is up $2,000.
Okay.
So,
Fair enough. I mean, I want to, even though I have a smaller account, I want to do the right plays because I'm also learning, and obviously I'm going to add money to this. as time
the
goes
most
on, and-
important thing is to know what your options are. Okay. Then you can still, even when you know what your options are, okay,
Mhm.
all but one of them are the wrong options.
Okay.
So it's essentially you're buying puts when you feel that you have a 5% chance instead of a 2% chance of catching a falling knife.
Okay. Fair enough. And then what about any wisdom in let's say taking those Ford 17s, and I'm like, you know what, I don't care too much about the amount of
Mhm.
money I'm losing on it. More
Right.
so, I just wanted to be in the right direction and selling those and rolling them into the 12. Is there any wisdom in that?
You mean just taking a loss and doing that?
Yeah, taking a loss and taking that same money and putting it into the Ford 12s.
I mean, you can.
Is there any wisdom in doing something like that?
You can certainly do that. Sure. There's that's like the linear, thing. It's like, okay, I'm losing money. I'm not going to make it back, but I still believe Ford has, strength to it. So you step down into that, and again, I have lost a lot of money on these, but simply
Okay.
because I know you have the Jones for the risky, so for instance, on these Ford 7, how many of them do you have?
I got 52 calls. So I think a
You have
total of like,
52.
I think it's like, so a total of like $7,000 that's worth right now. I'm down like two and a half.
Okay, so you have 52 contracts on which you're down 47 cents each, right? You bought at $1.80, and they're at $1.33, so you're at 47 cents. Okay, so what you can do is you can take a look and see. Let's say I'll just hypothetical. Let's say the Ford April or June of 21 17s are selling for 40 cents. Okay, so you sell 52 of them and you collect 40 cents. Okay, and it doesn't get to that. You keep the 40 cents, and now you still have the ones you're long, but now you've kind of evened it out. You collected the 40 cents, you were down 43, 47, and now you're like, okay, cool, I'm going to get rid of everything. But you have to wait until the ones you sold expire, in
Right.
June or whatever that hypothetical date is.
So
And hope that fucking Ford doesn't shoot up and, and get you fucked. So,
yeah, that's one strategy. Oh man.
Right. I mean, that's the strategy that allows you to keep your currently losing position, which still has a shit ton of time on it, so it can potentially correct itself. Once you sell it, that's it, but a way for you to potentially recoup the paper loss and turn it into an actual gain is by selling these calls,
Got it.
and again, most of the time that actually works. But
Okay.
when it doesn't, man, holy fuck. Yeah. Tina, I've seen you keep lighting up. So was there something?
No, I guess I'm a little confused on that one. When you sell a call, you said you have to wait till the expiry to see where you actually are. Explain that, meaning
Okay.
if you,
Okay, I'm going to explain it, even though there's a big part of it that makes me want to say specifically because you're new to this, that says, you know what, don't worry about this. Okay. You know, when you sell as a means of opening the position instead of buying, okay, when you sell and you collect, let's say like in that example, you collect 40 cents, okay? Now, if the stock drops and that 40 cents becomes 20 cents, okay, since you sold at the beginning to collect the 40 cents, you can then buy it back at 20 cents and keep that 20-cent profit, okay? You following me? Okay, now, however, if let's say you collected that 40 cents and now the stock has jumped and now that 40-cent option is worth $2.40. So if you buy it back, you got to come up with an extra $2 times however many contracts you have. Okay. However, so just visualize this. You buy Ford options with a strike price of 15 expiring in June of this year. Okay. Okay. You buy them at 40 cents. It jumps to 16 tomorrow. Okay. It goes up from 40 cents to $5. You are fucked. You collected 40 cents. You owe $5 fucking dollars. But you have until June. And you realize that this giant jump is because, you know, some bullshit. Oh, Ford, blah, blah, Hummer, whatever, bullshit, jump in price. And then everyone goes, oh, that's not a big thing. And 3 days later, it's down to whatever. And by the time June comes around, the stock is trading at $15.50, which is still higher than the $12 it was trading at when you paid 40 cents for the option, when you collected 40 cents.
Right.
But now it's expiring with the strike price of 16, but it's at 15.50, so it's worthless. So you get to keep all of that 40 cents while having several cardiac arrests along the way.
great.
You know?
Don't do it. Don't do it.
Right.
Looking
So,
forward to that.
I mean, honestly,
Sorry,
you know,
don't do it.
this is really like one of those things that I highly do not recommend until you really just have a lot of money, you know, because it's really one of those things where something innocent like, I'll just do that. I'll collect $400. And then something happens and you owe 40 grand, you know, and it's like, wow, lesson learned. So, yeah, so I've explained it, but, you know, this is why it's very important. When you place trades, you are buy to open, okay? You are not sell to open, okay? Do not make that your first, the action where it says action,
Yep.
you know? And I'm sure you've like seen it where it's like sell to open, sell to close. Well, you know, what is sell to open, you know? Well, that's what that is. Sell to open is gateway to hell.
Don't hit the wrong button.
Right, don't hit the wrong button. Okay, who else? Anyone?
Hey, this is Scott. I'll
Yes.
jump in. So
Yes.
hi, everybody. Nice to meet you all that I haven't met before, which is pretty much everybody. So I would just want to get what your all sentiment, Vadim, but everybody else as well, about, you know, some of the things that have been going on more on the macro level, or what Vadim likes to call the technicals versus the fundamentals within a company. So, you know, we've been talking about inflation, we've been talking about interest rates, and then lately there was, you know, certainly quite a kerfuffle about taxes. The capital gains tax, you know, trial balloon, if you will, that went out, right? So I think the market gave a good response to that, which is, okay, if this were really, really what the market fears would be the case, then I think that the reaction would have been a lot more swift and a lot more, definitive. But I do think we're living in an environment where taxes are going up, period. Now it's a matter of when and how much and across what kind of, spectra they are. So is it corporate? Is it capital gains? Is it income tax rates and all of those things? So there's a lot of market, or macro level, I'll just call it, news and concerns and potential headwinds in a lot of places. So on one side, you got the macro level of the vaccination is here in the United States. Global is another issue, and we probably should think about that. But the vaccination rollout is going much more swiftly. Things opening probably with that kind of huge surge in momentum behind the opening. But then you've got a lot of things that are potentially real downside risks and downside factors. So just on that, I just would like to hear what people are thinking. Is it just so have nice long expirations on your options, buy and hold actual positions in good companies versus doing options? Other what's crypto in a potentially higher tax market? Does crypto all of a sudden become more attractive? Is it less attractive? I actually have no idea at all. So I guess I've got a lot of things packed in there. It was really more about the macro environment rather than some of these individual positions and individual strategies.
Okay, everyone else go first.
So
I
this is
have
the-
a thought. Go ahead. Sorry, Rob. Go.
Yeah, let me just offer up some thoughts, mostly because I come from an economics background and I tend to look at the macro. I do pay attention to the micro now because I would simply add that I like to know why things are changing. So I'll just use an example of Nike. So I made this Nike investment of all the upsides that I could have chosen that Vadim had invested in. I chose Nike because I knew it. Nike's had a bad couple of weeks of news. There's nothing fundamentally wrong with that company. They've had a couple bad weeks of news. I see that and I go, okay, I shrug it off, right? So that's micro level. Coming back to your macro level, I have a couple of thoughts. Number one, I think I am certainly I buy into the notion that we are facing short-term inflation. It's a very straightforward supply and demand. There is a demand for things of which there's not enough supply, so prices in those things are going to go up until the supply mediates the demand. I think that's pretty straightforward. Will there be, could we go up? Could we see 2 or 3 points of more permanent inflation over the next couple of years, given all the debt we've taken on? Probably, yes, and we should. That's not so bad, right? So that's just kind of my thoughts on inflation.
Thank you.
At a bigger macro level, I think when I look at things that concern me, but I don't lose sleep over them, part of what you hear, Vadim's really got me in the habit of listening to CNBC for at least an hour a day. I can't recommend that highly enough. It's really important. Just choose an hour, almost any hour, but noon and 5 are really ideal, and sometimes both, particularly if it's been a weird day. I like to listen at 5 o'clock and go, what just happened? There's I think a growing concern about valuations overall. We've had, if you look at the charts since last April, there's been a pretty good year of a run with a few dips in it. Does that mean it's going to go down? I think that, one of the things that I'm learning about is this notion of breathers, right? I don't think inflation is going to put things in check. I don't think that interest rates in the short term are going to put things in check, mostly because I believe the Fed is not going to raise rates anytime soon. Will the bond market fluctuate a little bit? Yes, of course, but again, I wouldn't pay too much attention to that this year. I think the really good news is, again, at a micro into macro level, is we're coming out of a pandemic with a lot of pent-up demand, a lot of money on the sidelines. I can't believe this won't be a very good year, and I can't believe next year won't be a very good year. Beyond that, like year 3, then I get a little bit worried, right? I get worried because the stimulus is all spent. That's like the adrenaline that's getting pumped into the market. And, you know, just because the bill's been passed, that money's coming out all year long. If infrastructure passes almost in any capacity, let's call it, I don't know, we'll find a happy medium. We'll call it $1 trillion or 900 billion. That seems to make Republicans happy when it doesn't have a T at the beginning. If it's $900 billion, that's going to be another input into the economy over the course of, that's going to carry us into 2023. Most of my investments are long-term. I have a couple next year that, well, anyways, I made some 122 calls because I thought I was a smart ass. But it's good to have that balance. So not concerned about inflation, not really concerned about momentum, although I think there'll be some breather moments in here for sure. I think people are nervous about inflation. Tax thing, you're right, taxes are going to go up. They have to go up. I will say, just to give perspective, taxes in this country are at a historical low. They are incredibly low. Corporate taxes, personal taxes, our taxes are really low. Should they go up to 42, whatever that crazy number was they want to tax the rich at? That's nuts. I don't think that'll happen just because of the influence of the rich in the end. I liked Vadam's call that was something that kind of was designed to appeal to the left. They heard it. Will it happen? I don't see how it happens. I don't see how they get the votes to get that through Congress. I just don't think it happens.
I'm inclined to agree. I think that was again, it was a feint to the left, and
yeah,
you know, just saying, okay, we're here at the table now. Let the games begin.
Irina, you want to weigh in?
Yeah. Anyways, I don't think it's going to be a big issue in the short term.
All right. Thank you, Rob.
Yep.
Yeah. So, so here are my thoughts. It's not actually specific to the market because I still am learning it and I'm trying to understand how it behaves. But in terms of macro and what's going on, I know that Jerome Powell's talking about being dovish. He's going to continue on with all the stimulus and all that stuff, and that they consider inflation to be transitory. But honestly, like I'm getting like I buy in, but now I'm starting to be a little nervous about it because like supply and demand. But from what I understand, the supply issue is going to be an issue for the next multi years. It's not like a short-term supply squeeze. It's a long-term supply.
Supply of what? Supply of what?
Of all things. They're saying like containers. Try to get a container, like shipping, ports, you know, everything.
Yes. Issues are seen potentially through the end of the year. Okay, but understand, as soon as they say issues are seen until the end of the year or into the beginning of next year, that means that's factored in.
Okay. And then the other thing that I was thinking about is that I've recently heard that Canada announced a tapering of its quantitative easing. So like that's the first country to start it. And if they're starting, does that mean that's going to be something that's going to continue to trickle down through other governments? So that I don't know what impact that has.
There are no Canadians here. Canada is irrelevant. Okay. It's like Luxembourg. But you know, one thing we have to realize is, again, Wall Street, Main Street, Fed, bond market vigilantes. Okay, the Fed controls the long end of the curve, the 10-year and further out. Okay, but most of the action takes place over shorter periods of time. It's the shit that's used to finance, you know, short-term debt, 1-2 year, 5-year notes, that kind of shit. Okay, so that end of the curve is controlled by bond market vigilantes. Okay, what are bond market vigilantes? It sounds like it's a couple of guys. Okay. The first thing that you have to understand is that the bond market is, it's either 10 or 100 times bigger than the equities market, okay? And the equities market is in the trillions of dollars, okay? So just think how big that shit is. That's why the butterfly effect in finance always starts with something happening in the bond market. It's always there. Oh, some Malaysian bonds. Holy fuck, here comes a tsunami. You know? Any bonds in any third world that are sizable, tied to usually a dubious financial institution, much like this fucking Archegos shit. Okay? If Archegos would have, instead of Credit Suisse, was Morgan Stanley, we would not be having a nice earnings season right now for anyone. The market would be fucking fucked. You know, but because Morgan Stanley said, fuck morality and ethics, we're going to fuck everyone else, while at the same time selling these $85 Viacoms, we're going to be unloading these $40 Viacoms because we're trying to cover this Archegos loss. What they did was like, oh my, I don't know how it's not legal, how it's not illegal, but it's not illegal, so we don't have Lehman Brothers situations again. It's like the fail-safe, you know, the ripcord. It's the fuck someone down the line option, you know, don't get fucked yourself. And that's, you know, those are the things to watch out for. The thing that allows me to sleep easy at night is what's happened in the past is that the bond vigilantes have forced the Fed's hand, where they've come and said, we see this shit happening. You have to get ahead of this and you have to raise rates, you know, because it's never about dropping rates. No one's ever complaining about dropping rates, you know. But here, the Fed has said, we don't give a fuck what's happening in the short term. We're not acting until we have the data of what has happened in the past to say, oh, okay. And you know why they said that? They said that because what they're really saying is we are fucking really, really, really probably never raising interest rates again. Why? Because America owes so much fucking money. How can we possibly raise our own payments? You know, if I owed you fucking money, I wouldn't be like, okay, let me pay you a higher interest rate on that gigantic sum of money. You know, and I'm pretty sure Jay Powell and even the dumbest guy on the Fed's probably a lot smarter than me.
Vadim,
Yeah.
can you explain what you said just a few minutes ago, where you said there's a lot more money in the bond market? Now, when I used to do trashy, you know, penny stock and stuff, yeah, I would wake up every day and I would look at the 10-year yield, because that would show me if the money was moving from the debt market to the stock market, right? So why is there so much more money in that market, even though rates are so low? Everyone says you're stupid for putting money in there. Is there some, am I missing out on corporate bonds in that equation? Like, what am I getting wrong here?
Yes, exactly. Exactly. It's the
So the-
bond, it's the bond market. You know how many bonds? Okay, IBM. IBM has issued one stock. It's the stock that trades on the New York Stock Exchange. Why don't you look up how many different bonds IBM has issued? You know, dozens, if not hundreds.
I heard about that
Other
with like Carnival.
corporations, municipalities, states, everybody issues bonds. Anytime you need to pay for anything, you issue bonds. Because most companies, you know, a lot of bonds are private. Most companies aren't public. They can't issue more stock or sell more stock. They've got a debt. They can
Okay.
issue bonds against earnings, against whatever, you know?
Okay, and so
Yeah.
so
And
that's why
they
when the
charge
10-year
higher
goes up.
interest. They charge higher interest too, because
Yeah,
I heard about that,
exactly.
like
Exactly.
13%, 14%, 50, whatever it is.
Huge, yeah. Junk bonds, you know, the junk
Well,
bonds.
Carnival, I think, was selling them for like 13 or 15%. I was listening to something
Right.
about that.
Other nations, foreign debt,
Yeah.
you know?
Hey,
It's insane.
And maybe all of you guys can answer this for me too, but I was looking, remember how I think I mentioned in the group chat one time that my parents put aside money and they were asking me, who I had no business in this, how to invest for their retirement. Now, they didn't have any money for a longest time, and suddenly during COVID, they made a ton enough where they could retire. I think they made like a few million. Okay, so prior to that, they had nothing. Now they're asking me what to put money in. Now, traditionally, what does everyone tell you? Hey, when you get old, make sure a certain amount of money is in bonds and a certain amount is in stocks. But now that the bonds that they can buy that are relatively safe are such low rates that I'm like, bonds are trash. Buy equity.
You know what, Amar?
What do I do? What do I tell them?
Okay, I'm going to interrupt you, and because there's only one answer to this question. Okay, what bank do your parents have their money at? Is it like J.P. Morgan? Is it Chase?
Yeah,
or
like Chase.
Okay, they should go to their bank tomorrow. Go to the bank manager and be like, we would like to set up an appointment with your wealth management. They have enough money that they will get a very high level of service. And in actuality, what your parents need is what Tina Tina's, a lot of her and family and all of that is at Bank of New York, which is a very conservative place, which is somewhere where if you're retiring or retired and don't have a lot of investing experience or anything else, you want to be able to go to a very established, very trusted source that's not going to, first of all, pull a fucking Bernie Madoff on you, okay? And is going to be like, hey, as someone told me, we're not going to make you rich. We're going to keep you rich. Okay. At this point, your parents want to be able to live on their money with having as little depreciation of it as possible. They want to maintain it while it throws off whatever they need to live on. So if they speak to someone like that at a place like Chase, they will get a high level of service.
Okay.
Or even, I don't know, you're with TD Ameritrade, is that right?
Yeah, I have Schwab and TD Ameritrade.
Right.
Yeah.
Schwab also has wealth. You know what? I don't know. Did you set up anything with Josh?
No, I don't know who Josh is.
No. Well, Josh is the guy that's kind of helped a lot of us with Schwab. But I'll send you his info, okay? And you can reach out to him and just be like, hey, I'm part of Adam's group. My parents are this. They need this. Do you have wealth management people who can help? Talk to them, talk to Chase, have 1 or 2 points of comparisons. That's it. It's really a situation that none of us should be offering any personal input on.
Yeah. Yeah, fair enough.
Honestly. Yeah. Anyone?
Doge the moon, what?
Sasan, have you parked? Where are you? Are you doing whippets somewhere?
Oh, hold on.
Me?
You are. I knew it. I
No,
knew
made
it.
it home. There's a birthday party going on at my place.
Oh,
So
there
I
is?
have come in, said hi to everybody, and now I'm in the bathroom where I can hear you guys again.
Is it your birthday, Susan?
No, it's my fiance's birthday.
Oh,
I took her out
awesome.
last night, and now we're having a Colombian party.
Very
Which,
nice. Lots of
there's
blow.
Where was the invite? Where was the invite?
It's like mariachis and pinatas, basically.
That's awesome.
And are the pinatas full of blow? Woo!
Yeah. I wish.
I was wondering why you were wearing a tie. I was like, he's not going to work.
Right.
No, I just got off of work. I'm taking it off. You guys can watch me get naked.
Yeah. Excellent. Sasan Dairy, emergency room doctor by day, male stripper by night.
I really want to be a mariachi.
See.
Dude, I worked with an ER doctor who owned one of the strip clubs in Miami. Like, he had a share in there, and he'd give us free cards for lap dances all the time.
Awesome. I think
great.
they need to somehow work into lap dances and like Apple Watch sensor kind of shit, you know? You know? Oh my God, did you run 20 miles yesterday? That must be what that $2,000 at the strip club was.
Your heart rate will be up for more than 30 minutes.
Anyone? All right. Anyone on topic or, you know, or
Please
Yeah.
pray for Apple,
I should-
you know?
Yeah, I should cut out of this bathroom before everybody thinks there's something weird going on here.
Yes.
But,
Yes.
I gotta run. Have a wonderful birthday
Yeah,
party.
I
I
gotta
gotta
run
go.
too.
All right. Okay.
right.
Love you guys.
Okay.
Take it easy,
Have a
good one.
guys.
Bye-bye.
Good
Thank you.
night.
Thank you.
Good
That was
week.
great.
All right.
Thanks.
Are we
Thanks,
good?
Rudy. Yep.
All done?
Take
All
care.
right, guys. Have a lovely, lovely week. Keep an eye on shit. You know, I mean, expect things to get unsettled, you know, because it's really the biggest companies. And people are gonna look for ways to knock them down, okay? Because there's a lot of people who realize there's money in them, but they can't get into them now. So they need to beat them down, you know? And it doesn't really, I thought that Apple would be further than it is. You know, so that's why I'm expecting big things from them. But this is also, it's the Biden week, the speech. I heard Joe Manchin speak today. None of that shit's happening. You know,
Yeah.
none of that shit's happening. You know, but the good thing is something will happen. And yes, taxes will go up. Yes, all of, you know, that's all inevitable, but it won't be as bad. Corporate taxes will go to 25 instead of 28. Capital gains long-term will go to 28 instead of 43 or whatever. So, you know, it's going to suck, but it's not going to prison suck. So, you know, this is also, again, if there is volatility, if the sea is rocking, this is when you want to be utilizing money, you know? So have your eye out for opportunities, not just in, oh, Apple's down, should I buy more Apple? Amazon's down, whatever, Facebook. No, but if something happens that drives the market down and you were actually looking for something else, and now because of something happening on the left side, the right side has been affected, go buy yourself some more of the right side, because what's happening on the left is only cosmetically affecting it. It's not fundamentally affecting it, you know? So don't just look to pick up amongst the direct wreckage, if there is, okay? And if Apple does run or whatever else, do not be afraid to get on, okay? Because stocks that break through 52-week highs, they usually run, especially when they've like bumped up against it. Apple, if it's good news and Apple sets a new high, it has to keep going up, because if it doesn't, it'll be like that head and shoulders to the downside, and then the stock will go down, and it'll be like, why the fuck is it going down? Everything's projected. They blew everything out. Those tiles, I don't even know how much they're going to sell. I was watching the other day, the 5 o'clock show, and one of the guys is like, I'm going to buy like 10 of them. I'm going to put one in each of my kids' cars. I'm going to put them in this. I'm going to put them in that. And I'm like, he's fucking totally right. Totally right. You know, so, and those things are like, it's like what, 4 for 100, and then you can buy more. And how frequently are you going to lose them? Although I don't know how you'd lose them, because you should be able to.
The battery died.
Yeah, with the battery or something, you know. But I'm thinking, I'm like, yeah, I'm going to take one. I'm going to like drop it inside my, or like put it somewhere inside the frame of my bike. So it'll be like inside the post or whatever, you know. And it's like, yeah, That's the great thing about Apple is, it's just the phone. It's just the phone. When you combine the wearables and the App Store and now the PCs, it's not just that. And then. But anyway, guys, have an awesome week. Safe travels to those that may be traveling, and may each week we feel better and be richer.
Thank you.
All right. Ciao, ciao.
Okay. See you later.
See ya.